Hello and welcome to the Decrypting Crypto podcast. It is August 21st, 2025, and I'm Matthew House Barbie. I'm on my own today. Austin has abandoned me, but don't worry, we're still going to be covering some of the biggest stories. There's a lot that's been happening. I was away last week, so it's only fair that Austin abandons me this week. But don't know if you know, a few things have been happening on the price action side of things. Um, we've had just a huge amount of activity on the digital asset treasury businesses over the past few weeks, especially on ETH, which has been capturing the majority of the headlines. We've seen that, I guess, cool down a little bit, but this is much more related to the macro situation right now. And this week in particular is where we have a lot more going on from a macroeconomic perspective. And all of this really is stemming around rate cuts. And you're probably hearing a lot about the talk of the September rate cut. This is driving the majority of the price action in the equities market. I would say the US equities market, but really is having a ripple effect on global markets. This is also playing a huge role in the crypto market and risk assets overall. Why is that the case? Well, if you've listened to any of our episodes previously where we've covered macro, which we at least usually talk about every week, you'll know that rate cuts are very bullish for risk assets. Cost of capital goes down, more investments going in. And where we are right now is yo-yoing around or flip-flopping around, whichever metaphor you want to use, on the likelihood of the Fed cutting rates in September, on September 17th. If we go back to July, even the end of July, before we got into August, and this was just after the last FOMC meeting, the the chances of a rate cut, implied by the bets that traders are making on the in the markets, was around about 40%. 40% chance being priced in of a 25-point cut in rates, which you can determine from how traders are positioning around bonds in particular, as well as other things. The August for jobs report hit, and this is where we saw those huge revisions, serious downside surprise in the jobs reports, for the current and the prior with the revisions. And the real worry there was, actually, is the economy as holding up as well as we thought it was? These reports questioned that pretty heavily and put additional pressure on the Fed to cut rates. At that point, August 4, rate cuts were effectively a lock in from where they'd been positioned in the market. 97% lock in from the way that traders were positioned. Of course, August 15th happens. We have PPI, the Fed's preferred measure of inflation, which came in pretty hot. And the worry was, actually, if we are going to cut into rising inflation, are we going to make things work? And here we lay in the conundrum of the Fed's dual mandate to both um, keep inflation under control while promoting employment, which is a proxy for economic growth. 84% is where we're at after that PPI spike. This week, and kicking off really today, is the Jackson Hole Symposium, which is where we will have a lot of discussion from the Federal Reserve around the current setup. Jay Powell has a speech tomorrow, and this is where you can expect an enormous amount of volatility. This week has been very volatile, as you saw yesterday morning through to yesterday afternoon. What a crazy difference that's been. Tuesday, we saw a big sell off on fears that maybe, just maybe, valuations were getting a little frothy, both in equities and then that bled into crypto. Traders jumped in yesterday pretty aggressively to buy the dip, and we leveled back out today. Um, the at least futures were looking flat down. Let's have a little look at where we're sitting right now on equities. Flattish, slightly down. Crypto, BTC at just pushing towards 114, but we're 113,700, and ETH below 4,300 USD. So lot of volatility. The speech tomorrow with Jay Powell is going to be a big talking point, and I imagine a lot of bots are going to be trading that based on every word that comes out of Powell's mouth. So tomorrow morning, Washington, D.C. time, I think. Oh, actually, no, they're in Wyoming. So it would be Wyoming morning. We will have that speech. Honestly, my perspective on this is that there is so much more room for downside from this speech. It's highly unlikely that Jay Powell is going to hint towards rate cuts. He's probably going to try and be as neutral as possible. But if we start to see any language that leans towards more of a dependency on the upcoming September data before we kind of make any decisions, that will be seen as bearish because we have more inflation reports coming out. We have another PPI report in September, which, if that comes in with an upside surprise, then we could be in trouble from a rate cut perspective. That's what I'm talking about through here. Similarly, if we hear talk that devalues or diminishes the value of the jobs report data, where any kind of hint towards that they don't really trust it, or they don't really use it in the same way as they value the PPI and CPI data, I think we could see a bit of a sell-off. I don't see many situations where Powell comes out and is just particularly dovish. If that were the case, I think we will start to see a lot of aggressive buying. The best outcome, I think, in all of this is that it's completely neutral. The status quo is maintained. We don't glean much from it, and markets just kind of trade sideways a little bit. I think that's honestly the best case. The reality is, as I mentioned, there is a lot more data to come. September is going to just be a wild month. And it could be a great month from a crypto perspective. It could be a bad month. And I'm talking about a price action perspective. What there will absolutely be is a roller coaster ride of volatility. There, no doubt, in the same way that we've had this over the past, I would say 4 weeks, a real up and down, we're going to be in for arguably much more in September. So we have September 2nd, we have PMI report, slightly less important compared to PPI, which is the Purchase Managing Index, but will be a big signal that everyone trading risk assets will be paying attention to. We have the JOLTS report the day after around job openings. That's going to be massively watched. September 5th, all in like the same week this is. Non-farm payrolls, a huge report to check in on. September 10th, following week, PPI. I would say of all of these, that one is the biggest curveball. If we see inflation higher than expected in that September 10 PPI report, I think the 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 bets on a September rate cut will dramatically fall, and I would be quite surprised then if the Fed does cut rates. If we see it neutral to downside surprise, we will see aggressive bids coming in on risk assets, because then on September 17th, we have the rate cut decision. So it's all going to come to a fore on September 17th around this rate cut decision. Be careful out there. It's going to be quite a roller coaster ride and very hard to place bets at this stage. Um, I'm not sure if I do. Long term, I remain very bullish, even for this year coming into Q4. But we're in a very volatile period right now. Okay, that's a bit of macro. Wanted to talk about it. Super important. There's been lots of positive discussion over in Wyoming this week, especially around crypto in general, which is great to see. I'm going to talk a little bit about an, an absolutely crazy story that's been happening in crypto in just a minute. And you may have heard a little bit around some of this in the Monero 51% attack. And then there's been some uh, new developments in that we'll talk a little bit about. It's a fascinating story. I also can't not mention the fact that Kanye West has allegedly launched a token yesterday, um, Yeezy, YZY. Let's have a little look at how this has performed so far. Just share my screen here. Let's see, let's just go to CoinGecko. It's easy. It's a good looking chart, isn't it? So we had this huge spike. This launched. I actually missed the launch of this. Thank God. Early hours of the morning for me in the UK. Surged up to $2.88, which what's that? An FDV? Oh yeah, nearly 3 billion in FDV, and has absolutely cratered. It seems there's allegedly a lot of insider holdings here. Please be careful with this stuff. There's a chart like this never looks pretty. No doubt there's going to end up being more bids if Kanye West starts tweeting a load more about this, but yeah, I'm not so sure about this one. Everyone's excited to get back to the celeb coin era, right? Maybe not. Well, what else has happened? Some amazing, incredible data was shared yesterday around Hyperliquid. You may remember, and I actually I tweeted this out. I think if you check out my X account, let me bring this up. Uh, let's share this. Okay. So take a look at this. This is the revenue per employee of every company in the world, the largest revenue per employee. You may have seen about a few months ago, Tether was shown in this list with $93 million per employee. They have a very small team at Tether and a phenomenal amount of revenue. Hyperliquid just blew that out of the water. They have, I think, somewhere in the region of 15. I think it's under 20 people at Hyperliquid, something like that. and their revenue per employee is just over $102 million per employee. Context here, like look at this, like Apple 2.4 million, Meta 2.2, Nvidia 3.6 million per employee. This is like over 10x on some of this stuff. It's unbelievable, really, when you look at the kind of scale. Um, they reported an estimated 1.167 billion in annualized revenue. 11 people. That is incredible growth and pretty consistent growth as well. And considering this is a fully on chain product, I think that's what makes it even more interesting. So props to the Hyperliquid team. I mean, it's a phenomenal product. I mean, being at Kraken myself, we look a lot at what's happening on chain and the innovation there. And as a crypto degenerate myself, I like to play around on a lot of these platforms. And yeah, wow, it's it's incredibly impressive, and that team are doing some amazing stuff. All right, let's talk about this story with Monero, because Doge is now in the mix. Let me start from the beginning. You may not, I'm going to give you the TLDR on this, but if you haven't dug into this yet, I highly recommend it. So, first of all, let's just, if you're not familiar with Monero, I assume that's because you weren't involved in crypto prior to maybe 2019. But for those of you like me that were around prior to that, Monero was around way before the 2017 cycle, but it was one of the darlings of the 2017 cycle. It's a privacy coin and is one of the oldest cryptocurrencies to exist, extremely focused on privacy, along same areas like Zcash as well. It uses proof of work, just like Bitcoin does, to secure the network, so not proof of stake. And I appreciate we really haven't talked about proof of work in a long, long time. So the majority of blockchains is, I don't think I've heard of another chain launching with proof of work of it as its consensus mechanism. But I'm not going to teach people to suck eggs here, but let's just quickly recap. Ultimately, you have individual nodes, miners that provide hash rate through their computation power to secure the network and achieve consensus. Now, one of the consistent worries or security concerns around proof of work, I mean, it also exists in proof of stake, just in a different flavor, um, is a 51% attack, which is when a single entity owns 51% or more of the hash rate. Technically, you probably need actually slightly less than that, somewhere in like the 35-40% mark, but let's not get into technicality. They can take control of the network. They can do all kinds of things, fork the chain, produce orphan blocks, do all kinds of stuff. It is not good. It means that the security of the blockchain is compromised. This happened to Monero 2 weeks ago, I think Monday, August 11th. So not this Monday, last Monday. How was this achieved? One of the reasons why this is hard to do is because the economic incentives to do this, you got to think about like the why you would want to do this and the cost involved. To be able to own 50% of the hash rate, you're going to need a huge amount of processing power. Now, most blockchains also have their miners. The hash rate is provided by ASICs, which are specialized mining rigs that are basically purpose built just to do that one task. It's not like a general purpose CPU or GPU. And they provide extremely high hash rates, which means And these are very expensive machines. To be able to acquire 51% of the hash rate, it would cost a huge amount of money. And then if you do that, the economic incentive to actually do that, maybe like, direct all of the rewards to yourself or do something malicious, doesn't the economics don't always math. So how has this happened? Well, here's where we bring in Cubic. Cubic is a crypto project. It's a protocol, and I don't know much about the history of Cubic, how old it is, whatever. The first time I ever heard about Cubic was through this story, really. And so they're an AI crypto project. They've built, or at least they've stated they've built a decentralized AI model, which is called AI Garth, which is just kind of funny. Dumb name. Don't know why. It's pretty funny. I was looking at one of the papers that they produce on the website, and what they mentioned is, I'm just going to read this. The chain was designed to be extremely lightweight, running out of the RAM of its validators. It functions as its own operating system, has its own innovative quorum consensus, and has the ability to utilize mining power for other purposes rather than wasting it on simple hashing, which they call useful proof of work. Okay, so don't worry if none of that made sense. I'll explain, and this will get interesting. So they decided to, as they say, as an experiment, see if they could execute a 51% attack on Monero. And this is unprecedented, just to be clear. This is an extremely old crypto project. It's kind of like an institution. The thing with Monero, though, is that they use GPU miners and they do not allow for ASICs to be used for mining, which does mean the barrier to entry to a certain extent on hash rate production is a bit lower. It also means that you don't need specialist mining equipment, and it means that you can maybe bring on miners that have been mining other blockchains that are also GPUs. Um, that also use GPU miners, just bring them over and start mining Monero. Many years ago, I think in 2017, I was mining XMR, which is Monero's token, and I could go over and use the same mining rig to, what was the other one that I used to mine? SIA, which was like decentralized storage. It's a bit of a throwback if you were involved in crypto back then. And also at the time, ETH, hilariously. So this was prior to ETH moving to proof of stake. Anyway, what's happened? So they decided as an experiment they could execute a 51% on Monero. And I think this is the reason behind this is somehow to prove the power of AI Garth. I I saw a comment from their head of marketing at Cubic. This is called they go by Retro Drive. Says we're looking to take over Monero, but not a double spend, as it will, as you say, will ruin the protocol. This was in a interview with I think the Block. Sorry if I've got that wrong, but I think it was either the Block or Cointelegraph, one of the two. So how proof of work mining often works right now is that you'll have large mining pools. So miners can join a mining pool, which is a collective of miners, and mine together. And the reason for that is that you can combine the hash rate and distribute the rewards evenly versus, let's imagine you have like 10 miners and they all provide the same amount of hash rate. There's an element of luck to earning like more rewards. So instead of like one miner getting like this massive reward for producing a block or whatever, um, all of the rewards go into the pool and distribute evenly. Individuals get slightly less. They have less chance of getting this like one big payout, but it gets distributed across the board. So Cubic have this mining pool of miners, and what they do is they offer incentives for people to join their mining pool. Their incentives are funded by their Cubic token. They have their own token, completely detached from Monero. And context here, Monero is like a 6 billion market cap protocol. This is a big blockchain. a top token. Cubic was like 300 million FDV or something like that, right? So factors smaller, but they're printing tokens, incentivizing people to do it, and also Cubic were earning mining rewards from mining XMR. They were growing this more and more and more and more to the point where eventually they became a very significant pool, the largest pool by far. And it seemed like there was so much confusion around a load of this where the Monero team were like almost in denial this was happening. I don't really know why that was. And they were dispelling all of this, I guess, to stop, FUD, which actually seemed to be pretty legit. And then what we saw on August 11th, they post out this statement, Cubic do, and let's see, where is this? I'll share this because it's a statement on the Cubic website that I saw. Yeah, so they do this like press release, right? And where is it that it says? Yeah. The final successful push began on August 11th with the deployment of a more sophisticated selfish mining strategy. So this is where that they achieved 51% attack, they said, 51% of the network or hash rate. And then they did a selfish mining strategy, which is, they take over the network itself. They can start producing a disproportionate amount of like the blocks. So the sudden appearance of orphan blocks on the Monero network in the days leading up to today was the telltale sign that Cubic strategy was working. This tactic allowed the Cubic pool to gain a disproportionate share of the block rewards, and ultimately they controlled the network's consensus. Just so you know, not good, not good for Monero at all. And they they finally kind of come out and they say, with the takeover test now complete, Monero Network's core functionality remains intact. Its privacy, speed, and usability have not been compromised. However, the end goal is for the Monero's protocol security to be provided by Cubic's miners. This way, rewards will be funneled through Cubic's pool, bringing higher profitability and creating a new, higher incentive landscape for Monero miners. Let me translate that for you. Cubic now control the majority of the rewards and are profiting from it. The thing that surprises me the most is that Monero is only down 16% in the past month, which is obviously a lot, right? Just don't get me wrong. It started cratering on the news of all this, but it's nowhere near down as much as I thought it would be. Cubic, on the other hand, is up 23%. Now, here's the next development on top of what is already one bizarre and two kind of insane story. The Cubic community held a vote in their Discord channel to suggest which blockchain they would choose next. It seems like they're on a bit of a mission here. They held a vote between Dogecoin, Zcash, another privacy coin, and Casper, all proof of work chains. From what I understand, I don't know that much about Casper, but Zcash, Dogecoin, and it must be proof of work with the way they're doing this. Dogecoin won, so now they've kind of passed this vote. Interestingly, Dogecoin is also proof of work. I think it was just a Bitcoin fork, but it does also allow ASIC mining. So a lot more challenging. I'm not quite sure how they're going to figure that piece out. But Doge is down 18% in the past 30 days. It went down sharply after this vote. The focus on Doge is actually, it seems, to test out if they can do this ASIC mining chain. Again, the head of marketing said, we want to see if we can create a similar incentive structure for an ASIC-based coin. We want to mine it for profit and see what it evolves into. That's still a few months away, and until then, we'll continue with Monero mining. So this, this is obviously going to be concerning if you're involved in Doge in any way. However, it doesn't seem to have stopped uh, people buying. And look, it's a very different story trying to, at a very different mission, trying to ever get to something like 51% on Doge versus Monero. I think for Monero, it puts some questions on whether they go moving forward. Quite challenging. But it's also reigniting the question around proof of work and brings that to the fore. Of course, Bitcoin is a proof of work chain. Now, there is not enough tokens that Qt could print to incentivize people to be able to do some kind of attack like this on Bitcoin. I don't think they would actually be able to do this on Doge either, to be completely honest. However, it does bring this into question. And what I do think we'll start to see is off the back of this, more and larger, almost like vampire attack esque moves like this. And in particular, from maybe much larger, more well capitalized players that can do this. The reason I say it's like vampire attack esque, this reminds me quite a bit of, in a very different way, the DeFi summer when we saw the launch of Uniswap, and then we had a vampire attack from SushiSwap. But instead of it being around, you know, uh, the consensus of, I mean, of course, they both run on the Ethereum blockchain. It was focused on liquidity, and the SushiSwap ultimately incentivized Uniswap liquidity providers to move their liquidity over into SushiSwap, suck the liquidity out, and thus brought all of the trading volume. Now, looking back in hindsight is a beautiful thing here. We can see that while that worked in the short term, long term, that did not play out, and Uniswap won that war. This is a very different story, I think, for when you talk about the security of smaller blockchains. And I'm sure that there'll be a lot of discussions from a lot of proof of work teams around how they can avoid coming under the radar of the likes of Cubic and maybe even larger projects that want to do some of this. But interesting. And, there's some will say this is like really bad for the ecosystem. Others will say this is the whole point of building decentralized systems where people are free to test the networks. That's the whole point of security. If they're compromised, should they be running in the first place? So I expect there'll be a lot of discussion around some of this. We'll keep tabs on this over the coming months. I know Austin's going to enjoy talking a little bit about this. We've been sharing some stuff in our Discord chat. So yeah, we'll keep up to date. All right, that's pretty much all we got. We'll be back next week, and Austin will be back as well. We'll dig in a little bit more. It's going to be a big economic and macro week with all of the data that I mentioned at the start. Tomorrow, we've got Jackson Hole's speech from Jay Powell, as I mentioned, and all of the different data reads going into the start of September in a couple of weeks' time. So lots going on, but I'll see you all next week.